Welcome to our market outlook. First of all, let me start with a brief review. Last day, key indices ended down, extending last week's fall as cautious investors sold shares at every rise they got ahead of India's industrial production data for December, which will be released today. It was the eighth consecutive negative closing on both the Sensex and Nifty. Choppiness prevailed throughout the session after the Reserve Bank of India's Governor Mr. Subbrao expressed his concerns that India was headed for the highest ever current account deficit during this fiscal. Selling also got intensified after Siam reported domestic passenger car sales declined by 12.45% in January 2013 from the same month of 2012. Sentiment also remained dampened on continued concerns over India's economic growth after the government's estimates on February 1st, 2013 showed that financial year 2013 growth could be worse than expected. Though some recovery attempt was seen after Finance Minister P. Chidambaram indicated that he would bring in major changes in the budget to boost equity culture among retail investors. The recovery effort turned futile after this comment also. Profit booking was also witnessed on higher levels. FAME opening in the European countries too failed to boost the Indian market. The top gainers on the Nifty were Cipla, Axis Bank, Hindalco, Tata Motors and Dr. Reddy's Lab. The top losers on the index were ACC, Jindal Steel, IDFC, Maruti and ONGC. Coming to today's outlook, US market and India's industrial production data for December will set the trend for domestic indices today. According to a Newswire 18 poll, industrial growth is likely to rise 1% in December following a contraction of 0.1% in November. The underlying sentiment, however, remained continued to negative side as the Nifty ended at a more than 1 month low of 5,980 range. And the Nifty ended below a psychological level of 5,900 mark for the first time since December 27, 2012. We see a strong support at Nifty in 5,880 range, and if the IAB data comes with the positive surprise, we can expect a bounce back up to 5,950, and at that point also we need a convincing cross above 5,950 range. Otherwise, the selling pressure could again come in the market, and market may drag to the next immediate support level of 5,810 range. That's where the 100 EMA stands. So we can expect a correction up to that range if it unable to hold above 5,950. The option distribution data also suggests the strong support at 5,800 and stiff resistance at 5,600 range. Sentiment has turned negative as investors remain skeptical about a further rally in the global indices given the renewed concern around Eurozone. Back home, October-December earnings will continue to be watched. Shares of oil and natural gas may recoup partial losses on today's trading as the company posted a net profit of 55.6 billion rupees, which is higher than the analyst estimates of 53 billion rupees. Major companies detailing their October and December earnings today include IFCI, Jindal Steel and Power Grid Corporation, CESC, Hindpetro and Steel Authority of India. Reliance Industries may remain under pressure after the company announced last day that it's going to shut down one of the crude and distillation unit at the Jamnagar complex in Gujarat for around 4 weeks starting February 18th. So that's all from my side. Thank you. Have a nice trading day.